Good day, my name is Christelle from France the Klerk Independent Technical Analyst. The first one on our list is Brent Crude Oil. But before I look at the current price, I want to take our viewers back to pre-COVID when there was an inverse head and shoulder formation that took the oil price to above $140. Now currently we are sitting with a head and shoulder formation. Depending on where you want to start the formation, we've got a left shoulder, a massive head, and multiple right shoulders. I only count a shoulder when it touches the neckline. However, that neckline, to confirm a warning for a head and shoulder formation, is waiting at $72.16. So at the moment, the warning of this head and shoulder formation will only be off the table when the highest right shoulder, which is waiting at $96.44, starts to change into a support. So the possibility of this warning for this head and shoulder formation will remain in place as long as the highest point of that right shoulder remains a resistance. Now the warning will be confirmed once the neckline waiting at $72 changes into a resistance. The full target of this formation is $22 should the full formation play out. Very important. This formation is built over about a 2-year period, which means it can take 2 years or even longer for the full formation to play out, assuming that $96.44 will remain a resistance. It will be interesting to see what that will do to inflation, etc. But nevertheless, a head and shoulder formation, double top and triple top formations are all warning formations, implying that the top and the rally is in place, and that you can expect some downside, some profit taking. $72.15 is the line in the sand for the Brent crude oil price. Very important, it's trading just above the 40-week moving average, waiting at $83.54 at the moment. And very important as well, as we can see that there is definitely lower highs from that highest right shoulder in the making as well, which implies loss of momentum and that the sellers are starting to take profit at lower levels. And that's when you see a lower high, and that implies negativity, loss of momentum, and obviously taking profit sooner rather than later. Next one on our list is Woolworths. Also one of the favorites on our market, and a share that has kept a lot of people on their toes recently. But what do we see? For the last 4 weeks, the share has tried to change that red line, which represents the 40-week moving average, into a support. In other words, it needs to become a base or a floor. But there was just not enough buyers to change that 40-week moving average into a support and keep it one. That 40-week moving average on Woolworths is waiting at R64.30. The fact that the share has tested it now twice, in other words, touched the 40-week moving average and retracted from it, kept it a resistance, is seen as a negative technical goodbye case. And that is very negative. Ladies and gentlemen, that tells us that there's just not enough buyers to lift the share price through that 40-week moving average, that line in the sand, that sentiment gauge meter that tells me whether the long-term sentiment buyers, investors are strong enough to take the share price to higher levels. This week, remember, these are weekly graphs, so every candle represents the price action of a week. And last week was a clear spinning candle. Both tails at the top and the bottom is almost the same in length, with a fairly small real body. That tells us indecision. They were not, the buyers and sellers, the traders, investors were not sure what they wanted to do with the share price, and it opened lower than last week's high, below the 40-week moving average, which is seen as negative. Now, we had a little bit of a rally when the share found support here around 54.07 rand. It tested the 40-week, as I said, could not change it into a resistance and retraced from it. Now, my stochastic is not even in overbought territory yet. In other words, investors have not made use of the full spectrum to take this share price to overbought levels. In other words, they started taking profit before it becomes overbought. We can see that in the blue line, losing steam, trying to break downwards through the orange line. That is all negative indications that the selling pressure is on. Now, this bearish engulfing candle is in the making. That candle will only be finished by Friday's close. Based on weekly graphs, that's when you need to make a decision. And the fact that that 40-week moving average remains a resistance is seen as very, very negative. I will feel a little bit technically. Nobody knows. I mean, it doesn't matter how I feel. But technically, above the 40-week moving average, 64.30, the first sign of strength will appear again, and that will be seen as positive. And very important, when the high of last week waiting at 64.79 and that test of the 40-week moving average in the week of the 18th of June at 65.25, when those levels starts to change into a support again, it will be seen as positive, and then we can assume that there might be enough buyers to take the share price again to higher levels. But indications all around on Woolies that traders are taking profit sooner rather than later. Shoprite, ticker on our exchange SHP. For the last 4 weeks, the share has stopped making new highs, and the resistance at the top there, waiting at 295 Rand 76, is a clear level of resistance. Every time the share price gets there, it can't find enough buyers to lift it through that level. It remains a resistance, it remains a roof, and that is seen as very negative. Now, very important, again, last week's candle is an example of a spinning candle, which tells me indecision. So it will be interesting to see what this week's candle end up being. Remember, it's still a work in progress. It will only be finished by Friday's close. But even in the making of it, we can see that there's a long tail at the top of that candle, which implies that the high, and it confirms that the high was at 295 Rand, but that the sellers were strong enough to bring the share price all the way back to now currently close at 288 Rand 52. So only above that resistance at the top can we assume then that the momentum to the top can continue. But as soon as these previous support levels, and the first one is waiting at last week's low, that is 279 Rand 26, and the week before that at 275.27. As soon as these support levels start to change into resistances, that will be seen as confirmation of pessimism, confirmation of taking profit, and indication that the buyers are not strong enough to keep this share price at higher levels. My stochastic is obviously in overbought territory. That means that elastic band is extremely stretched to a side. But it doesn't mean that the share price cannot go higher. It's an indication that the probability is there that we can see a pullback, confirming that by the candles. My 40-week moving average is a very beautiful, strong support, which tells me that the long-term sentiment towards this share is still positive. That is waiting at 259 Rand 50. But as soon as that level starts to change into a resistance, it will obviously change the whole sentiment towards negative. Now, if we go back to the history, you can see Shoprite is at very high record levels, higher than the record back in March 2018. And that high was let me just make sure that, there you go, 281 Rand 90 was the high in the week of the 5th of March 2018. Now, the share price recently, the highest one was in the week of, let me just see which one, was this one, the week of the 18th of June 2024. And that high was 295 Rand 88. So very critical, a little bit higher than that one back in 2018, which tells me we can probably see a little bit of profit taking, a little bit of a pullback, and keep an eye on that 40-week moving average. That is a very important indicator for long-term investors. Barloworld, ticker BAW, had a beautiful rally. We're sitting here with a gap, a window between 73 Rand 97 and the low at 76 Rand. Now a gap is obviously a space that where no trading has taken place. It's seen as very positive because it gapped higher, and that is a critical support level. And we assume that the momentum to the top will continue as long as that gap remains open. But that gap can also act as a magnet. In other words, once the seller starts to take profit, it can basically suck the sellers in to take it all the way back to close that high in the week of the 8th of April, waiting at 73.97 to go and close that. In other words, trade at that high, which is the lowest level of the gap, in order to close it. There's a rule that says all windows gets closed, especially on weekly graphs. They carry a lot of weight. It can take decades to do that, but at some stage the share price needs to go and close that window. If we change this to a line graph in order to take out the noise, we could even see that there's a little bit of a lower high in place. If we go back to the week of the 3rd of June, 92.02, that high in the week of the 1st of July is 90 Rand 52, also implying loss of momentum and that sellers are taking profit at lower levels. My 40-week moving average is a support, which tells me the long-term sentiment is positive, but we can only assume that the momentum to the top will continue again when that high at 93 Rand 33 starts to change into a support. My elastic band, my stochastic, is extremely stretched to a side. There's a negative divergence there. Lower highs on my stochastic, which means the probability for more downside is even there, especially if last week's low, waiting at 83.46, starts to change into a resistance. And very important, that 81 Rand 33, it's a very clear horizontal line that I've drawn in there that has been tested back, going back to 2022 all the way. There was a support until October 23. That head and shoulder formation took the share very low to 57, 58 levels, and now beautiful turnaround there with the morning star formation. And now it's a matter of, all right, the investors are going to take some profit. How low can they go? Are they going to go back to the 40-week? Are they even going to close that window? And then again, at what stage will the sellers dry up and the buyers come in and start to protect the share price? Still in overbought levels, right, at 84. So there's still a lot of room for downside before it becomes oversold. Lows. Listed on the I didn't write the ticker down. Ticker LOW. Mukhale wanted us to look at lows. At the moment, we can see that there is a ugly head and shoulder. Left shoulder, massive head. Oh, I need to change that. So my necklines have to touch the shoulders. Otherwise, it's not a valid. There you go. Beautiful. Left shoulder, touch the neckline. Right shoulder, touch the neckline. Touch the neckline. Beautiful right shoulder, left shoulder, head and shoulder formation. A warning pattern implying that should that neckline change into a resistance, and that is waiting at $213, should that change into a resistance, the warning will be in place. Only if the share price starts to trade above either the right or the left shoulder, depending on which one is the highest. In this case, it is the 24th of June, the week of the 24th of June, waiting at $230. Only when that level starts to change into a support and the share price starts to trade above it, can I assume that the warning formation of the head and shoulder is off the table and has become obsolete. This head and shoulder formation can take the share back to these low levels of $180 and even lower. My 40-week moving average is currently a resistance that is seen as very negative, implying that the long-term sentiment at the moment is negative. However, that is waiting at $221.06, and only above that level can we take a little bit of a sigh of relief for the moment and say the momentum to the top can hopefully attract more buyers in order to take the share price to higher levels. What is very dangerous is the fact that my stochastic is in oversold territory. Both lines within my stochastic is pointing downwards, and I've got a warning formation. So, and that is always why it's ideal to take profit when the share is overbought, right? Because to take profit on a warning formation in oversold territory makes it dangerous, because some investors might want to might use this oversold situation to create another right shoulder just for a little bit of a bounce because it's this oversold. So at the moment, below that neckline, warning in place, and only above that right shoulder can we assume more upside, and the warning will then become obsolete. Don't forget to email us your requests for next week's show or send us a message via Twitter. Have a fantastic week. Take care.